Welcome to part 5 of the Forex Mastery course. My name is Dylan, and this is the continuation of the Mastery course by Forexia. So be sure to watch until the end for a chance to win our signature trade course. Here is the risk disclaimer, so feel free to pause the video and read through the risk disclaimer. To jump right into this video, we're going to be looking at a recent analysis and price projection that I sent to the Forexia community just a few days ago. This was actually last week that I sent this specific price projection and analysis on the pair USD/JPY. We can see an obvious uptrend. Here we can see the days of the week: Monday, Tuesday, Wednesday. It's a little bit hard to see, but there they are. That means this is day 1, day 2, day 3. After that 3 days, 2.5 days, 3 days of uptrend, we can see the high of the week being made here, the signature trade pattern right around here, inducing to the high of the week, and then that overall reversal. However, we were projecting price to spike right around this area here, potentially reach our red zone right here before completely reversing. So you can see I used in the analysis that I sent, I used some of these infographics. These infographics you can find on our Instagram. So if you go to @Forexia, you can find all of these different types of infographics for free on our Instagram. They're extremely helpful, extremely useful if you want to learn more about structure and how we overall how we trade here at Forexia. So that was the before, and here is the after. We can see price. We can see on the left this was the price projection, and on the right here we can see all of the take profit levels were hit. The first two were hit within the first week, the first 2 days, and then the next week it took about 4 days until we smashed through all take profit levels. And this was actually a flash crash. It was over 400 pips that this entire movement was over 400 pips. So we were able to catch over 120, 125 pips on these take profit levels that we had set. Here are some of the different examples of the infographics that you can find at Forexia on our Instagram. So make sure to follow us at Forexia on Instagram to not miss any of the new infographics that we have coming out basically almost every day. So here is once again some of the different socials that you guys can follow in order to find the price projections that we send. This specific analysis was sent published to TradingView. It was also, however, so this is why you guys need to follow multiple sources, multiple socials, because if you were just following our TradingView, you may not have seen this analysis that was published, because for some reason TradingView decided to ban that analysis, that specific analysis, because apparently it violated their terms of use and nobody can see it. So that's why you should always be following multiple socials, multiple of our social media accounts. Follow our TradingView, our blog. You can follow our Medium, Telegram, probably the most important. That's the most up to date. And you can follow our Facebook page and Facebook group. Just look up Forexia or Forexia Trading. So we also published this to the VIP Signals group with the exact entry level, stop loss level, and take profit levels. Here you can find that analysis, price projection, and exact entry details right here. This is just an example of what the traders in our VIP group received, and we actually hit the take profit 3 was over 140 pips. So I thought it was like 120. It was right around 140, 146 to be exact. So if you guys are interested in joining our VIP signals, we send multiple signals just like this every single week. If you are interested, feel free to check out the link below in the video description. Here's also a commentary I made along with the signal itself. So I said, after making my analysis on USDJPY, it became clear that the current market condition is trapping buyers. So it is inducing buyers. In my opinion, USDJPY has made a high of the week already, and I do not expect it to be broken. There is a possibility the high could be retested, but in my opinion, I think we are all downhill from here. My analysis shows my price projection and markup. It also contains some infographics from our Instagram page that help to identify the market structure. So overall, I think USDJPY will start to push down come London, New York session, and that's exactly what happened. Here are the different confirmations that we used in this trade. Sunday, Monday, Tuesday was the 3 days of uptrend. It was a buyer induction, so 1, 2, 3 days of obvious uptrend starting the start of the week. Sunday, Monday, Tuesday, Wednesday. We had the formation of the signature trade right here. Then we saw the high of the week was set after the breakout of the signature trade. So signature trade breakout forms the M formation off of the high of the week, creates the high of the week midweek Wednesday. And then after we saw this initial reversal right here, we in real time we sent the analysis. I drew up a Asian session consolidation and a potential breakout and then a reversal here. So that's what I tried to basically mark up on my chart with these little arrows. That was my price projection. It calculated session timing and structure, and we had the macro and micro signature trade structures. So if you guys want to learn more about this exact setup, how we were able to basically predict almost predict a 400 plus pip flash crash on USDJPY, the exact basically the exact top with less than 15 pips of drawdown, 400 plus pips of potential profit. If you guys want to learn how we did that, I'm uploading a video to the channel as I speak, and you guys can see that video as well. So make sure to check out that video next if you guys want to learn exactly all of the different confirmations that I had and why I was so confident that this trade specifically was going to reverse at that exact price level. So diving deeper into the different acts, the different structures similar to the 5-act structure that we previously went over. This is the 3-act structure. So the 3-act structure, you could consider it the first 3 acts of the 5-act structure, and then the 3-act structure, you could say it's like you're just expanding it to create that 5-act structure. However, we're going over the 3-act structure now because it is a specific type of narrative or framework used in narrative and writing. So the 3-act structure is a common storytelling framework used in narrative writing, consisting of 3 main parts: setup, confrontation, and resolution. So take a good look at it right here. We have the start, Act 1, setup. We have Act 2, confrontation. Act 3, resolution. Okay, we have the climax right around here, plot twist, and then right around here, the final climax, Act 2, and then Act 3. Right here we have the little M formation right off of the crisis, and then the reversal. So you can see how similar this is to the structure of the market. We have the day 1, day 2, day 3, Monday, Tuesday, Wednesday, and that initial induction trend. So that's this overall storytelling framework is also embedded in the structure of the market, because it's just an easy way to basically create a narrative and make you think that the market is going to continue in a specific direction, when it's all a pre-planned, pre-plotted, pre-engineered crisis and structure, and all of this is pre-planned. So to get my point across, we already went over the problem, reaction, solution, and it's extremely similar to what we saw here with the setup, confrontation, and resolution. Problem, reaction, solution. So here is another example of this structure, where we have the beginning, the middle, and the ending. 1, 2, 3. We have the start, we have the end, and something happens. You commit to the goal, rising action. We get to the climax, and then seize the prize, rapidly falling action. If we look at it and compare the structure to Star Wars, right? We have Obi-Wan, Luke's parents are killed. We have all of these different things happening, and then right at the end, right around here, Obi-Wan is killed, and then right at the end they use the Force, and that's when everything changes, right? Now, if we overlay this specific narrative or storytelling framework or structure, if we overlay it on the USD JPY, this is the daily time frame of the USD JPY. The analysis of USD JPY that we just looked over, this is a macro perspective on the daily time frame. So this is exactly how it's how this structure turned out. So right here on USD JPY, this is how it looks on the daily time frame, and you can see it is exactly similar to what we see on the left hand side, and I even overlaid it here, and you can see just absolute perfection. This was all pre-designed to happen before. This was all pre-engineered, pre-planned, everything from when it started to when it was going to end to exactly what was going to be the news event that was going to cause this massive change in direction. So everything was pre-planned. In relation to the 3-act structure, a high-impact news event is nothing more than a pre-engineered crisis. So if we have the 3-act structure right here, and we have Act 1, Act 2, Act 3, we see right around here at the climax, there is some type of crisis that happens. And then that's what changes everything, and everything kind of climaxes, and when that climax happens is when everything basically changes, shifts, and it ends. And you go back to the beginning where you started, right? So when in terms of the market, in terms of Forex, this crisis right here that happens in this 3-act structure is nothing more than high-impact news events that are pre-engineered to make you believe that this type of move, this 300 pip candle, is just happening because of a news event. When in reality, this is happening to play out an overall structure that they have been creating, a narrative that they have been creating for weeks, if not months, in advance. They just needed some type of event to make you believe that this was, this was some type of random event, right? That's what they want you to believe. That this was just some CPI news event this happened because of inflation numbers, right? When in reality, this entire market was pumped up to get you to buy in, and then they completely dump the price on you. Basically rug pull you. All right, here's some examples of the signature trade. I just threw these examples in here so you guys can see the potential for the signature trade. These are very clear examples, so don't think that the signature trade is always going to be this obvious and this perfect and this pristine of a example. So here is the before and here's the after. So this, like I said, just a perfect example of the signature trade. We have Sunday, Monday, Tuesday, that 2.5, 3 days of downtrend coming to the low of the week. And then we have that end of the day, start of the next day consolidation coming to a point, creating that wedge pattern of the signature trade, the breakout past the low or to the low of the previous day. And then we can see that reversal come midweek Wednesday. And we target the high of the week, which was right around here. That was 120 pips. Here's another example. And these have, I actually put a lot of the different confirmations as well in this example. So we have a very obvious downtrend right here. Sunday, Monday, Tuesday, induction trend, very obvious. This, come Tuesday, ADR was met on this specific example. The ADR, the average daily range, was met or exceeded. And then we had the low of the week created here. We have a macro W formation off the low. So we have a macro W formation right here. The signature trade wedge pattern with the end of the day in consolidation, beginning of the next day in consolidation, forming that wedge pattern, breakout to the low of the previous day, the low of the week, and creating a new low of the week. Here's that micro W formation right here, the first leg of the W, second leg of the W, and the overall macro W. So we have the macro W, the micro W. We have the volatile second leg stop hunt past the low, right into our red zone here. And then we have the stop hunt occurring exactly London session. So exactly right here is exactly start of London session is when that volatile second leg came in of that W formation off of the low. And this was a perfect reversal off of the low of the previous day. Could have had a perfect entry right here, right off the low. And all of these different confirmations just adding up, just combining to just give you the most confident trade that you can imagine, okay? You combine all of these confirmations, you guys, and you can have the most confidence that you've ever had in a trade. So the next video will be longer, and we will cover the signature trade strategy more in depth. Thank you guys for watching. Comment below your best day trading, and I will choose 3 people who comment to win the signature trade course. All right, good luck, you guys, and comment below your best day trading so you guys can have a chance to win the signature trade course. Take care. Thank you guys for watching. If you like this series so far, give it a like and subscribe for more. Take care. Peace out.